So a New York press report or folio or foley or some kind of paper in New York, somebody put out that credit card companies were closing and denying more accounts than they have in the past. This could be due to some sort of preemptive recession coming. I don't know if I even call it recession, more like a recess session. I don't think it's going to be bad as 2007, but I think there is something around the works. Um, that is also following Uber and Lyft doing their pre-offer to go public. They've kind of kept that confidential in the past couple months, and it snuck out today that they're going to be going public soon, and they have mostly withheld on doing that because they have also seen that there might be some sort of a recession in early part, the first half of 2019. So the big wigs, New York, the big wigs, Uber, Lyft, are also kind of both seeing the same signs. Here in Little O, Arkansas, we're kind of seeing those signs in the real estate market. A lot of houses on the market for sale, which is usually preemptive of some sort of bubble. Is this bubble going to be housing related again? Kind of early to tell. Will it be? Probably not. I think we learned what we had to learn 2007 and 8. Are people getting stretched in the other areas? Hell yes. Look at student loan debt. Student loan debt is outrageous, trillions of dollars in debt. And you're looking at a 22-year-old coming out of college with 70, 80 grand in debt, maybe a little lower for some of the smaller colleges, 50, 60, but they're only earning 30, $40,000 a year, which they still got to live. So they're paying $200, $300, maybe just interest. That ain't going to get them anywhere. So what's going to happen is that's going to build up over time, and everything, there's going to be a bubble in the student loan world. Um, there also could be a factor outside of the U.S. that could play into that. I've heard rumors of the strengthening U.S. dollar, how that goes into play with other countries that have borrowed money from us. So, small case, a country borrows $1,000. Our dollar is now three times worth it was. They have to owe $3,000 on their $1,000 that they borrowed. Take that into a numerical value that's much higher, $1 billion into $3 billion. That's going to go a long way in a smaller country that doesn't really have the backbone to support that manufacturing. Um, Again, I'm kind of playing it safe on my side. I'm not getting into any new construction that's on my dime as of right now, unless it might be rentals. I'm really trying to use other people's money that goes into remodels and new construction. If a client wants to build a new construction custom home, or investor wants to build real estate, whether that's new construction or rentals, or if I want to do my own type of rentals, that's kind of where I'm staying. A little bit safer zone right now, just because we're not really sure what's going to happen in 2019, or at least I think what's going to happen in 2019 might be on the more negative side that we've seen in the past 10 to 11 years, since we've had a pretty damn good economy in the past 10, 11 years. I mean, going on a decade now, I think something's going to blow. And I think it might be 2019 that happens. I'm not saying everybody should be, doomsday prepping or anything. Just be wary of where you're placing your money. There's a lot of inflation, a lot of inflated values that have gone on, real estate market and stock market, uh, and student loans. So there's a lot of money hovering out there that a lot of debt has to be repaid. So just be safe going forward of how risky you're being at your money, since that 10-year decade might be coming to a close.